Welcome to this explainer. Today, we are completely pulling back the curtain on what it actually takes to secure high-ticket prop firm payouts. Look, if you're serious about trading, you already know the market is absolutely flooded with wild theories, endless indicators, and these crazy promises of easy money. Well, we are leaving all of that behind today. Instead, we're diving into real-time quantitative data. We're going to examine a very specific multi-strategy system called Portfolio XFAZ from QuantsHaven. And listen, here is the absolutely crucial thing you need to keep in mind right out of the gate. Please note that these are forward test results, not back test results. That one distinction is literally everything, and we're going to explore exactly why it's the ultimate key to your trading success.
Okay, so here's our roadmap for today. We'll be hitting 5 main points: the $8,000 blueprint, inside Portfolio XFAZ, the forward testing advantage, deconstructing the strategies, and finally, risk reality and takeaways.
All right, Section 1, the $8,000 blueprint. Let's talk about the end goal.
You know, every trader who is actively scaling their accounts has this milestone in their head. It's a number that basically validates their strategy and their discipline. In the world of algorithmic prop firm trading, having a clear, definable financial target is exactly what separates the hobbyists from the true professionals. And for our explainer today, that target number is an $8,000 prop firm payout. This is a highly desirable, super specific milestone that the QuantsHaven system is actually engineered to target. It represents serious capital growth and, more importantly, consistent performance. It's not a lottery ticket, right? It's a calculated output from a robust system. And honestly, once you understand how a system mathematically reaches an $8,000 withdrawal, it completely changes how you approach the markets.
Moving on to Section 2, inside Portfolio XFAZ. Let's actually look at the real-time analytics.
So, what's the actual vehicle driving these kinds of results? Check out this high-level dashboard. If we're aiming for serious payouts, we need to be looking at serious metrics. Notice that 11.82% return based on $150,000 starting balance. That puts the total profit and loss at over $17,700 for the default configuration. And you can see that visual representation of the equity curve right there at the top. Notice how it's not chaotic. It's just steady. This is exactly what it looks like when edge protection and multiple strategies are working together seamlessly.
Let's see how this builds when we zoom in on the granular data. The dashboard expands here to show us exactly how that return was generated. Notice the win rate right in the middle there, 71.4% across 21 trades. This is super important because we are not talking about some high-frequency scalping bot firing off hundreds of trades a day, just praying for tiny margins. No, this is precise. It's 21 highly selective trades resulting in a massive hit rate. That level of precision is precisely what you need to safeguard a funded prop firm account.
But hey, a win rate isn't everything, is it? We have to know how much risk was taken to actually achieve that win rate. Check out the Sharpe Ratio on the previous dashboard. It's sitting at a staggering 3.94. For those who might be a little rusty on the jargon, the Sharpe Ratio measures risk-adjusted return. It basically tells us if the profits are coming from smart decision-making or if the system is just taking on wild, reckless risk. A Sharpe Ratio of nearly 4, that proves this portfolio isn't just getting lucky. It is managing risk exceptionally well.
So the crucial point is how this actually translates to the trader's day-to-day experience. And this brings us to the profit factor of 3.68. This metric is beautifully simple. For every single dollar the system loses, it makes $3.68 back. Just think about the immense psychological comfort that provides. You aren't sitting there sweating over every minor dip because you know the math is heavily stacked in your favor. It keeps your mindset incredibly steady, which is absolutely vital when you're managing large amounts of simulated capital.
And all of those incredible metrics culminate into this single powerful number, an expected value, or EV, of $845 per trade. This perfectly illustrates the statistical edge you need to consistently hit those payout targets. When every single time the system enters the market, the mathematical expectation is an $845 gain, well, suddenly an $8,000 prop firm payout isn't some crazy pipe dream. It's literally just a matter of executing 10 trades while keeping your edge intact.
All right, Section 3, the forward testing advantage. This is all about live versus hindsight.
Now, as impressive as those dashboard numbers are, we really need to discuss the most critical distinction of this entire explainer. Because in the trading world, what the numbers are is actually way less important than how those numbers were generated. I want to reiterate that vital point I made at the very beginning. Please note that these are forward test results, not backtest results. A hypothetical backtest is totally plagued by hindsight bias.
Honestly, it's super easy to build a system that looks like an absolute genius on past data because you already know what the market did. It's called curve fitting, and it completely falls apart the second it hits live markets. Portfolio XFAZ, on the other hand, is built on live forward testing. We're talking real-time data under actual market conditions. It's a robust proof of concept. This is the ultimate game changer for prop firm traders.
And this vividly illustrates exactly what forward testing produces: a remarkably smooth, upward trajectory on the equity curve. Look at that purple line. That's the total portfolio profit and loss. Below it, you can see the individual strategies mapped out. Notice how when one strategy goes flat or takes a small dip, another strategy is climbing? It keeps that purple line pushing steadily upward. This smoothing effect is practically a superpower, and it's only achievable through multi-strategy live testing and actual breathing market conditions.
Let's quickly break down exactly what that equity curve is accomplishing. First, we get that multi-strategy smoothing effect we just talked about. Second, a highly consistent K-ratio of 2.947, which basically means the growth is steady, not wildly volatile. Third, and guys, this is massive for prop firm rules, the maximum drawdown is strictly controlled at minus $3,630. Think about it. When your allowable drawdown is the only thing keeping you from losing your funded account, limiting it to just over $3,600 while your total profits climb to over $17,000, that is an absolute masterclass in capital preservation.
Which brings us to Section 4, Deconstructing the Strategies. Let's pop the hood and see what's inside.
So, what are the actual engines generating these live results? Take a look at this breakdown. We have 3 unique strategies working together. ES Quant Bambelli is a swing strategy running beautifully with a 100% win rate over 6 trades, netting over $6,100. Then we've got GC Quant Hackfall, an intraday strategy pulling in a massive $9,880 in profit on just 2 trades. But look closely at GC Quant Dell in the middle there. It has a yellow paused status. This is incredible. The system's edge protection actively recognized that this specific strategy was experiencing edge decay because its win rate dropped to around 57%, and it dynamically paused it to protect the overall portfolio. That is automated risk management happening in real time.
Finally, Section 5, Risk, Reality, and Takeaways. Let's ground all this excitement in professional trading realities.
Seeing a system dynamically protect your capital like that is super exciting for sure. But we always have to look at the professional realities of algorithmic trading. I want you to really absorb this quote from the source's disclaimer. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. You know, amateurs look at risk disclaimers as just annoying legal fine print to scroll past. Professionals, they treat this as a core feature of their trading psychology, treating your capital with absolute respect and understanding that the market guarantees literally nothing is the true foundational blueprint for surviving and thriving in this industry.
And this brings us right back to the central theme of our explainer today. The CFTC Rule 4.41 explicitly warns that simulated trading programs are designed with the benefit of hindsight. Typical backtests rely entirely on that hindsight. It's exactly why we have hammered home the point today. Please note that these are forward test results, not backtest results. Portfolio XFAZ's live forward testing directly combats this hindsight bias, providing a profoundly superior and transparent blueprint for traders like you.
So I'm going to leave you with this question to chew on. If you have been banging your head against the wall using curve-fitted backtests that just fall apart in live markets, how could integrating a genuinely forward-tested multi-strategy portfolio change your approach to securing your next prop firm payout? Seriously, think about it. It might just be the exact pivot you need. Thanks so much for joining me on this explainer, and remember, keep your focus on the live data.